Welcome to today's Explainer. You know, if you were watching the tickers today, you absolutely know it was a fascinating session, just full of contrasting forces. We're doing a complete market autopsy on the post-market report for July 17, 2026. Our goal here? To break down exactly what happened, why it happened, and what it actually means for your next trading session using nothing but the hard data. We're going to look at the institutional battles, the invisible technical walls holding the market up, and the global forces pushing against it. So get focused, and let's dissect this rally.
Boom, 24,334.30. The Nifty 50 closed the session with a massive jump of over 261 points, locking in a really strong positive percentage gain of 1.09%. This isn't just a slight nudge upward, folks. This is a definitive, high-energy close to the week that absolutely demands our attention.
And the SENSEX was right there with it, bringing that exact same punchy momentum. We're looking at a closing number of 78,143.91. That's a massive surge of over 968 points, or an impressive 1.25% in the green. Both of these benchmark indices delivered incredibly strong headline stats, finishing the week with undeniable bullish muscle.
But you know, here's where the plot kind of thickens. When we zoom out a bit, the picture isn't quite as rosy everywhere else. Okay, let's dive into this. We've got global markets out there flashing red, or at best, flashing yellow with caution. And yet, here's the Indian market, confidently closing in the green. So what exactly fueled this domestic defiance? What's the central mystery behind today's powerful rally?
Section 1. The Tug of War. Institutional Activity.
The data here brilliantly illustrates exactly who won the literal tug of war today. Foreign institutional investors, the FIIs, were net sellers, offloading about 376 core. But domestic institutional investors, they came in swinging as heavy net buyers to the tune of over 1,017 core. This massive domestic buying completely absorbed and just overpowered that foreign selling, actively keeping the broader market sentiment entirely positive.
So, you might be wondering, where exactly was all that domestic institutional money flowing? Well, the report highlights three specific, heavy-hitting sectors acting as the real muscle today. IT stocks stepped up and actively outperformed. Alongside them, banking and financial stocks witnessed some incredibly intense, strong buying. These three sectors, they were literally the engines powering the DIIs in today's tug of war.
Section 2. The Invisible Walls. Technical Levels and Open Interest.
Now that we know who was buying and what they were buying, let's check the market's vitals. Think of support and resistance like the literal floors and ceilings of a building. It's where market momentum traditionally bounces to catch a fall, or breaks when selling pressure caps a rally. Understanding these exact zones is absolutely crucial for predicting where the market will bounce or break next.
Now, what's really interesting here is how clearly the boundaries are drawn for the Nifty right now. Our immediate floor is at 24,200, but the major, critical support is sitting firmly at 24,000. On the flip side, our immediate ceiling is 24,400, followed closely by 24,500. And the report makes this crystal clear. A decisive close above that 24,400 to 24,500 ceiling, that could trigger a significant extension of this rally.
To validate those floors and ceilings, we look at open interest in weekly options. Basically, this shows us precisely where traders are placing their biggest bets on a breakout and exactly where they're building their strongest safety nets.
If you're wondering where the safety net is, the data says it's right here. It's deployed heavily at the 24,000 put strike, which is acting as a massive wall of support. Conversely, traders have placed their highest call open interest, which acts as strong resistance, at 24,200 CE and 24,300 CE. This options data just perfectly aligns with the technical spot levels we just talked about. Synthesizing all of that options data gives us a really clear, focused takeaway for the immediate future. The expected trading range is boxed in right between 24,000 and 24,300. Now, the report emphasizes that while we're in this range, there's a distinctly bullish bias. And if that upper limit of 24,300 is decisively crossed, we can expect the bulls to really take the reins.
Section 3. The World Stage. Global Market Cues.
Of course, India doesn't trade in a vacuum, right? Looking at the broader context, the global geopolitical landscape is basically a tale of two hemispheres right now. Western markets are showing mixed to positive sentiment, mostly in the US, driven by softer inflation expectations, though Europe is definitely trading cautiously. Meanwhile, Eastern markets, particularly Asia, were mostly weak during the session, and that was driven by a mix of profit booking and ongoing geopolitical tensions in the Middle East. So the crucial point is this. Despite the weakness echoing across Asian markets and that caution over in Europe, the GIFT Nifty is indicating incredibly stable domestic sentiment. That domestic buying power we analyzed earlier, it isn't just a fluke. It's robust enough to completely override the cautious and weak global cues we're seeing on the world stage right now.
Section 4. The Road Ahead. Tomorrow's Trading Outlook.
All right, we've dissected the rally, identified the technical walls, and surveyed the global stage. Let's turn this data into an actionable checklist for your next trading session. Based on the report, here are the critical variables you absolutely must have on your watch list tomorrow. First, keep an eye on the ongoing Q1 earnings season. Second, track those Middle East geopolitical tensions right alongside elevated crude oil prices. Both of those are heavily influencing global risk sentiment. And finally, keep your eyes glued to those FII flows to see if foreign sellers keep offloading or if they decide to join the DIIs in their buying spree.
Ultimately, the report's outlook for the next session is definitive. The trend remains bullish as long as that critical 24,000 to 24,200 support zone holds firm. That is your floor. On the upside, if the market can achieve a sustained move above that 24,400 to 24,500 resistance zone, it has the potential to trigger some significant, fresh upside momentum.
So we've seen the incredible strength of domestic buyers today, totally absorbing foreign sell-offs. We know exactly where the floors and ceilings are built. So I'll leave you with this final thought. With the 24,000 floor holding strong like a literal fortress, will that 24,500 mark be the next ceiling to absolutely shatter in the days to come? Keep your focus sharp, watch the data, and we'll catch you in the next explainer.